It is an absolute pleasure to stand before you today as the president of CFA Society Kuwait. CFA Society Kuwait was founded with a clear mission to provide ongoing educational support for investment professionals in Kuwait. Today, we are celebrating a remarkable partnership with Boursa Kuwait that lies at the very heart of this mission to promote excellence in investment management and financial literacy. Today's workshop represents the latest chapter in our collaborative journey, and I am excited about the knowledge and insights that we will collectively gain today. We believe that sustainable finance is not just a trend, but an important force shaping the future of the financial industry. I would like to express my gratitude to Borsa Kuwait for their commitment and continuous support, especially for this partnership. I also extend my gratitude to all of you today for your presence. Without further delay, I would like to introduce our guest speaker for today, coming from Bahrain, Zeeba Askar, President of CFA Society Bahrain. Zeeba is a highly respected banking professional with over 2 decades of experience in various areas such as asset management, private equity, corporate finance, and sustainable development investments. She has successfully managed investments of up to $500 million dollars and held leadership roles within the Bahrain Association of Banks. Zeba's qualifications include a CPA from Delaware, an executive MBA from University of Bahrain, and of course, she's a charter holder.
Good morning, everyone, and thank you so much. Thank you, Amina, for the introduction. And I would like to also thank the Kuwait Bourse for the invite to speak. So I think today's session, just to manage what to expect, basically what I'm looking to cover is to have a general discussion on I think the question that I keep on hearing a lot from the industry is, but why? But why? Is it something that we are only trying to say that we are doing sustainability, or do we really see value in having sustainability coming, investing into sustainability? Of course, something that's important for us is the investment gap. What is the market need for sustainability? Is there a real business case actually for sustainability? And we're going to be looking specifically at sustainability bonds, different bonds, and the guidelines, and what does it take for you actually to issue bonds that are aligned with sustainability, and a little bit on the regional investments and what is going on. So to give you a bit of background, so in 2017, I was working with a banking group, and in Bahrain, we have an association of banks, which is basically membership from different banks that they are tackling on different topics and aspects that are relevant for the industry. And in that year, they formed a committee that was called Sustainable Development. And I was asked to join that committee. At the time, I had no idea what sustainable development means. And I was like, I don't understand. You mean CSR? Is it something that has to do with, all these donations? And they said, no, it is something that's going to go bigger. So when I joined, interestingly, the committee had members and representations of 16 different financial institutions. The majority of the members and the members of the committee were actually from PR and corporate communication. And there were some people from HR, there were some people from investment, from treasury, but it was a very diverse group. And at the time, we didn't have any mandate. So basically, it was a committee, and it was like, okay, do something. So we thought collectively that what we are going to do is the majority of the representatives in the committee didn't know what sustainable development was, and I was one of them at the time. And we decided, okay, let us come with a guideline that basically says what do the banks actually require to be in place for them to align themselves with sustainability concepts. And that is when we came up with a policy recommendation paper that we sent it to the Central Bank of Bahrain, and we put very clear guidelines on what we expect to be in place so that banks will be aligning themselves. Ever since then, there were a lot of initiatives that happened in Bahrain as a result of the paper, and of course collaborations with the Central Bank of Bahrain. So this brings me to the SDG, and I hope you were paying attention to the video that was playing in the background, which is basically, I like this one because it is, I'm sure that by now you've heard it so many times, the SDGs, the 17 SDGs, but the way I like how it's presented here, it's basically, it's a to-do list for the whole world. It's not a to-do list for a single entity. It's not a to-do list for a single country. It's a collective to-do list that everybody has to contribute to. So when we think about the financial consequences of sustainability, and of course, sustainability is a broad term, and you might have obviously heard about the ESG, which is environmental, social, and governance. So environment is only one aspect of it, but then there is the social, and then there is the governance, which often refers to the economics. Now, this world map here just shows you the extent of the financial losses incurred by the world as a result of natural catastrophes. Now, the natural catastrophes, they are in a way associated with the increased global warming. The geographics or the dynamics of climate is actually changing. I mean, if you've been noticing over the past couple of years, you're noticing every single year they are telling you this is the warmest summer ever, and then the next year this is the warmest summer on record ever, and all of this is resulting in real financial consequences. So 270 billion approximately that was lost worldwide. Out of this, how much do you think was insured? Approximately 40%. 40% of that was insured. And in this particular year, 11,000 people actually lost their lives as a result of the natural catastrophes. Now, when we look at what is the economic impact on the different regions, and you can see that the highest impact is actually on Africa, but the Middle East as well is one of the areas that is expected to suffer huge economic losses as a result of issues related to sustainability. So this brings me to the question of from why to why not. And as you can see here is, you keep on hearing probably that there are new business opportunities and there are diverse financing solutions in place. Reputation is an important thing. And I was delivering one of the workshops and I asked, so it was basically for a company specifically. And they said, I asked them, why do you want to have sustainability policies in place? What is motivating you? So they said reputation. And I said, okay, if you think it's reputation, do your customers actually ask you about your sustainability practices? Do your shareholders actually ask you for you to go through all of these changes in policies, putting new businesses? And the answer was like, not really. I mean, even if they are asking, not many of them are asking. So the question was, why are you really doing the sustainability transformation? And I think this answer is very important. So I work currently with a couple of organizations that they are implementing sustainability policies. And one of the issues that I realize working with these institutions is whether the team actually working on the sustainability believes in the value of having sustainability transformation in the organization. Because realistically speaking, it is a lot of work, because there is a lot of data that needs to be collected, there is a lot of policies that need to be in place, there is real transformation later that needs to be done and made on the ground, and somebody needs to work on it. So unless the team actually sees the value in sustainability, how much can it be executed and how fast? Now, looking at this, and I think that's important for you. I mean, I'm not really sure what is the different industry backgrounds you're coming from, but in any single industry, you might have heard about what is referred to as the great wealth transfer. So it's estimated between 30 to 68 trillion will actually be passing from baby boomers to Generation X and Generation X to the millennials. And in this infographic, it demonstrates very interesting change in the mindset, change in the interest of the new generation that is coming. And why is this relevant? It's relevant because these people, the millennials, are going to be first, going to be the bosses, are going to be the customers, and more importantly, they're going to have money he will be in power and in control of that money. So basically, the way they think about things, and you might have seen with the kids, with the younger generation, they do actually care about what's happening with the environment. So when you think about from why to why not, because if you currently don't believe in the value, you have to think of who's coming next, who is going to be in charge and in control of money, because those people do care about it and it's important for them. So the way I think about sustainability is that there are three aspects you really need to think about. So basically, it's the strategic shift. There is an operational aspect to it because there is the risk. So the world map that I put for you about the natural catastrophe losses demonstrates to you how real is actually the financial losses as a result of changes in the climate. And climate risk, later on, you will see how it is coming on the top of the most likely and severe kind of risks. But besides maintaining operational efficiency and improving your operation, you are also looking for expansion. You are also looking for tapping into new businesses. So this one is actually a survey that was done and basically asking about what motivates banks to go and to do the sustainability transformation. And not surprisingly, again, you see reputation is on the top of it. But also you see areas related to climate risk, to improving operational efficiency, to expanding their market presence and basically expanding their market size. Now, this one shows you about the key mega trends in the market. And the importance of this slide is it is capturing most of the changes that we are seeing right now, but they're only going to magnify going forward. So, of course, digital, I'm not going to be talking about it, but digital cybersecurity, AI are some of the top areas in which are going to be shaping the future. Genomics, immunotherapy, aging population, so a very much social aspect has huge impact as well. Of course, the urbanization and the changes that are happening in different cities, climate, and then you have emerging global wealth. So I will be talking only a little bit about the demographic and social changes and the climate. So if I think about yeah. So just to give you the business case of the social aspect and the changes in demographics. So we are talking about aging population, and from your reading to their population is aging, and when the population is aging, they do require more care. So just to give you a simple example, this one is the population is growing, of course, with the improvements in the healthcare sector, even the longevity of people is actually growing. And so there is increased life expectancy, there is greater healthcare cost, and then this means there is an exponential spending on the healthcare. So this is an example of a social case that is very much transforming into an economic. So economic expense mostly that is borne by the government, but think about it as a private sector, you will see there is a huge opportunity here, because if you are looking to making the infrastructure, the products required for taking care of this particular segment, then there is an investment opportunity which is very much linked to sustainability. Now, this one is showing you, just a second. So this video just shows you in 35 seconds how the temperature has been increasing over the past 100 years. And if you look at the colorful boxes here, this is actually from a survey by the World Economic Forum. And as you can see, basically it's the top global risks by likelihood. And you see that the green boxes, which reflect environmental issues, as well as the technological and social, because at the time, I think mostly the COVID impact, but we'll be looking at an updated one. So this one is the one that is more recent, and it is showing also, again, the global risks ranked by severity. And again, you see the green boxes are at the very top. So that's why you might have been hearing more about climate and climate and climate over the past few years. Now, these areas are actually showing you what kind of risks are currently manifesting, which means what are the areas that we are encountering at the moment. So if you look at this graph, it actually shows you how much is the carbon emission and the greenhouse gases emission by sector. So one of the interesting areas that I wanted you to look at is actually the agriculture, forestry, and land use, which is around 18%. Now, this particular one, now you might be very much, aware, oh yeah, the transportation, the aircrafts, the electricity we are consuming in our homes. But something many people miss paying attention to is the way we live, the way we consume. So this 18.4% has very much to do with us having food, the way our food is used, because it requires a lot of land, and this is one of the main sources of actually emitting greenhouse gases. So this one, the 51 billion to zero, is actually from a book by Bill Gates, which he published it in 2021, I believe. It was about how to avoid a climate disaster. And in that book, he actually refers to, it was during the COVID time. So he mentioned that annually we are emitting 51 billion. And you might have heard about the net zero commitment. So the net zero means that we need to reduce our emission from 51 billion a year to zero. Now, with the COVID at the time, and with all the life that were lost at the time, it was around 5 million people who have died as a result of COVID. The world was on a standstill, transportation was on hold. How much do you think the emission came down as a percentage? Between 4 to 6%. So you can just imagine the magnitude of the problem at hand, that it took the world to be on a pause, on a standstill, people working from home, there is no transportation, there is no transfer or anything, but it only reduced the emission by 4%. So this one again is showing you about how the greenhouse gases have been increasing over the years. But another thing that we need to also consider very well is basically the rising sea level, which is increasing by approximately 3 millimeters a year. And this one is just showing you that in the event that the whole ice melts in the world, what is going to happen? We are an island, so that is a real concern for us, the rising sea level. In fact, the government has put in place certain initiatives to try to minimize this. But if I'm talking about it from an investment perspective, and for those of you who are investing into real estate projects, just a simple example, a bridge. When you are building a bridge, you need to decide on what is the height of the bridge, right? And remember that the higher the bridge, the higher the cost, because you need to obviously build it more. With the rising sea level water, this is going to be more expensive, and the existing bridges can no longer continue to be functional. So it is actually a very serious issue that besides, disappearing countries, but then it would also have to do with lifestyle. Now, green taxonomy basically is about what countries have in place certain guidelines or regulations that have to do with reporting on your green activities or your green disclosures, policies, actually legislations in place. And some of the things you can see here is basically taxonomies that are in place. And over the past few years, they have been evolving at a very rapid rate. And this one is, some people who are into sustainability, and especially if you have been, recently reading about it, you will hear a lot of different organizations, and you want to know who is doing what actually. So this one just shows you, we have them from a global principles, we have them from a reporting standard, you have regulations, as well as you have the ESG rating and indices. So this one is showing one page in place by the ISSB, which is the International Sustainability Standard Board, that has actually worked with the IFRS. Now, IFRS, in my opinion, is the strongest to apply guidelines, because companies reporting their financial statement are required in many countries to comply. So having a guideline that is supported by the IFRS, implemented internationally, and when we look at reporting and how they actually matter, so you have financial statements, which we are very much familiar with, we know what is happening. But when you think about sustainability reporting, it goes beyond that. So it is giving you further information that are not normally disclosed as part of the financial statement. And one of the important things is the jurisdictional initiatives, because many countries, like for example in Kuwait, there is the New Kuwait. There are strategies uniquely for different countries that they are focusing on certain areas of sustainability as it is relevant for their own unique infrastructure. I'll share with you this video, I hope it works, but basically it explains to you the new IFRS standards issue. I'll just summarize what this video is saying. So the IFRS, they have been working with the International Sustainability Standard Board, ISSB, and they came up with two standards, which is IFRS S1 and S2. Basically, those two standards are giving guidelines to organizations on what to report in relation to climate-related as well as social different factors, and they have recently been inaugurated. Now, one of the questions I always get asked, and that's why I decided I'm going to put it here from the source, which is the frequently asked questions, is whether it's going to be mandatory. Now, this will depend on the jurisdiction and whether they want to implement it, but it is, of course, there has been commitment by the G20 and by the G7. So I think it's going to be a matter of time that in our region it is going to be implemented as well. Another thing is the net zero commitment, which in 2021, many of the different countries have committed to it. This map just shows you of who has pledged, who has committed, and who has actually accomplished it. This one gives you an indication of our region specific, what commitment or pledges they made. Now, the net zero, familiar with the term, basically means that whatever I am emitting, I am trying to neutralize it. So I am reducing significantly my emission to the extent that I could reach a level in which I'm having a zero level of emission. So when we think about the Middle East and when we think about the MENA region and how much do we actually need to reduce? So this is the gap. 3,120 metric tons needs to go down to 1,795. Now, if you notice, these four sectors, which is energy, industrial, residential, transport, they account for 85% of the emission that requires to be reduced. And that's why you might be seeing, of course, energy generally, renewable energy specifically, has been the one moving the fastest. And the investments in this area has been the fastest. So when we think about the investment gap, now I gave you a generic view about the issues we have, about the different things that need to be tackled. But when we think about what is the investment gap, now the investment gap, there are different bodies, for example, TCFD, UNEP, IPCC, OECD, each one of them, they give you a different approximate. But in general, it ranges between 3 to 5 trillion a year of investment that is required to be in place to make sure that we meet the commitments that were made to reduce emissions as per the Paris Agreement. And some of the technologies that are expected to be top priorities or like really in demand, they have to do with agriculture and food. Remember when I said that 18.4% of the greenhouse gases emissions relate to the way we are consuming food. Of course, carbon removals and captures and different areas, electrification of cars. And I wanted to share with you this interesting products that is developed by Munich Re. So what they have done, and this one is also an example of how sustainability creates new opportunities. So basically they have green solutions, and the green solutions, they are catering for circular economy, green hydrogen, for the solar, etc. And these areas that I'm showing you is if you click deeper into the circular economy and try to find what solutions they have in place, you can see what they are taking care of. Now, why do you think this insurance matters to any business? Because as per one insurance, because of the risk, because one friend of mine in insurance, he told me once, he said, if we don't give you insurance, you won't have business. You won't exist because banks want to transfer the risk. They transfer the risk to who? To insurance companies, because they are the ones who are risk bearers. So that's why it is very interesting when you see that insurance companies are taking this very seriously and starting to come up with products and solutions that are catering for this increased risk. So looking a little bit closer at the gap, so we said that between 3 to 5 trillion is required annually, but in the Middle East, approximately, where is the Middle East? Yeah, here, this is the amount, or this is the gap of funding that is required in the region. So it shows you that there is real opportunity for investments as well as capital market products to invest into sustainability. This one shows you the different carbon capture technologies. I'll come to this in a bit, but I wanted to share with you what is happening around the region. So if we have a closer look, we look at the different projects that are in place, and one of them, the Kuwait one actually, is the recovery plant CO2. So the way this plant actually works is they are using the carbon capture technology. So it is called the CCUS, carbon capture, utilization, and storage. So what do they do? So the emission that comes, always remember the net zero. So they are emitting CO2. And what they are trying to do, they have certain technologies that actually captures the emitted CO2. And then what do they do with it? They can either utilize it, that's why you have CCU, or they can actually store it, or they can do a combination of both. So for the utilization, they convert it somehow. I'm not a scientist or an engineer, so don't ask me technical questions, but they basically convert it in a form that they can use it into for other purposes. Or what they can do is they can store it normally underground, deep underground. So the idea is that it is going back there and it can just remain over there. So this is just an example for you from Kuwait. Now, of course, the International Capital Market Association, they have come up with certain principles. These principles are the green bonds. They have sustainability bonds, they have social bonds, you have sustainability linked bonds, climate transition, and more recently they have the blue economy related standards. To avoid any confusion and to know what is the difference, because that is something, again, when I'm having conversation with people, they just use green for everything, including social. It's not the case. So when we look at these circles, basically green bonds, and I'll just show you here. So green bonds, they are specifically looking at things that are related to the climate and the environment. When you look at social bonds, they are specifically looking at things related to human lives, housing, healthcare, education, etc. So please notice the distinction between them, because for you to be that, if you did something social, it means you are green. The thing is that the intersection between them, you can, like, for example, if you are doing an investment that is catering for both climate as well as people, then you are having a sustainability related bond. That's why you have these three different standards. So the green is purely on green, the social is purely on social, but the sustainability bonds is the intersection between them. The other category that is issued is the blue bonds. So the blue bonds has to do with anything that is related to water, whether it is water we are consuming or it is related to the sea, to the marine life, etc. So these are going to be the blue bonds. Now, when you look at these guidelines, I think an area of clarification, because the social and the green bonds, they ask you to specifically report on the use of the proceeds. They want to see the process of project evaluation, the management of the proceeds, and the reporting. So I would urge you to go on the different companies and look at their, for example, green bond framework. The green bond framework, you will find all of them will have the same structure of document, which will cater for these four areas. When you look at sustainability linked bonds, and to avoid confusion, sustainability bond is not very specific in terms of the use of proceeds. It gives you more freedom in terms of what you're doing. But what they ask you to have in place is KPIs, indicators, key performance indicators in place. Another thing they have, the International Capital Market Association, they have actually a mapping between the SDG and the green bond and social bond framework. So for example, for SDG 1, they have written to you what use of proceed is aligned with which SDG. This matters when you are developing a framework, because you can say, I issued my green bond and it is aligned with SDG 1, 2, 3, etc. So to show you an example of how it is being implemented, this is from First Abu Dhabi Bank. First Abu Dhabi Bank is one of the first institutions that they have issued green bonds back in 2017. And this one shows you the numbers of how much has been issued. And you can see this is extracted from their sustainability report. So on the top, you see the 4 areas that I just mentioned about the framework. So the use of proceeds, the management, as well as the reporting. And this one shows you exactly what the use of proceeds are. Of course, this is not, I don't think it's only for the green bond, they have different categories. And also the decision-making criteria of how do we decide which project we can allocate funds from issued green bond. Now, to give you a bit about the financials of what is the size of the green bond and how much has been in place. So this one actually shows you the GSSSB, which is Green Sustainability, Social and Sustainability Linked Bonds. And you can see the increase that has been happening over the years. Of course, the bulk of it is actually in terms of green bond, but then it is followed by social bonds as well as sustainability related bonds. Now, from the global of the issued bonds worldwide, you have sustainability related bonds. They are approximately 14 to 16% of the global issuance. And when you look at who is issuing these bonds, actually, you will see that the sovereigns, which is where is it? The purple one, they account for approximately 18%, but non-financial corporates are big in terms of issuing them, and as well as you have the international public finances. This one shows you in terms of the ESG sukuks, so not only the regular bonds, but also in terms of sukuk, and I have listed for you some examples of entities in the region that they have issued sukuks, and you would notice that they have increased over the years. So 2021 was around 6 trillion, is it, or billion? Anyway, but it increased to 8, and 2023 is over yet, but there are a lot of issuances that also happened this year. In terms of the global of sustainable finance, which means or it is a bond, again, you see the increase that has been happening exponentially, and 14 billion in green and ESG bonds and sukuk in the first 7 months of 2023 compared to 8.9 in 2022. So this just shows you to what extent even the MENA itself is actually investing into issuing these bonds. These are just examples. This is a screenshot shot from Refinitiv, and they do have data over there. Bloomberg also, they have data over there. So in case you are interested to know more about the different issuances. And this one just shows you the gap in terms of how much has been funded and how much is the gap still. So if you look at, this is the increase that has been happening in terms of specifically climate finance, reaching around 850, but it shows you the gap, how much is still required for us to meet the global goals, which is the SDGs, basically. Just to come towards the end of the session today, many organizations, when they want to start their journey in sustainability, they start by putting a framework in place. And to put a framework in place, the first step they do is actually to come with a materiality matrix, because they need to understand what matters to them as a business and what matters to their stakeholders. And depending on, the group at the top, this corner, is the top priority. So this is where they start with, and this is where they start creating policies, creating investment strategies. And based on that, they decide how are they going to implement sustainability. Of course, in terms of investments, you can go from doing well, which is your purpose is purely financial, and then you have the impact only, which is the philanthropist and doing everything as donation, which is obviously not sustainable. But obviously there is the area in between, which I am trying to integrate different levels of sustainability measures and ESG within my investments. This is just to show you from a fund perspective. So this is BlackRock, and they do have a number of thematic funds. Of course, if you have been following BlackRock, every year their CEO issues a letter to all the CEOs around the world, and he always talks about sustainability and how important it is. Ahli United Bank is one of the examples we have in Bahrain that they have really leveled up in terms of reporting on their sustainability initiatives, and I would urge you to review their published report. If we look a little bit at Saudi and UAE, they are moving very strongly in the area of sustainability, and UAE has actually launched several programs that are encouraging green diversification. Of course, Saudi has been very huge in terms of the green investment initiatives, and they also disclosed their top priority SDGs and what they think matters to them the most. And this is from the Public Investment Fund, which in 2022 they have issued their green framework, and they have also in October last year had their voluntary carbon market, which is also a very big initiative in the region. And as for Kuwait, you have the new Kuwait strategy. This is extracted from the voluntary disclosure national review report, and it's actually very comprehensive and has a lot of the initiatives that are happening in Kuwait. And I think if you study this report, you will figure out areas of gap that your organization can actually benefit from. So, for example, on SDG 7, they have, this is one of the SDGs, all of the SDGs, they have the data and what has been achieved and where is the gap as well. Now, in the Boursa of Kuwait, obviously they have issued certain set of guidelines encouraging institutions and requiring them to report and comply with the SDGs. So this is just the last slide that I have. Basically, it's an example from National Bank of Kuwait. So they do have their sustainability reports in place. They have their framework actually in place. They have conducted the materiality assessment. And I think it is just a matter of time before you see many organizations come up with new products. Credit card, there are a lot of sustainability credit card solutions. As you can see that now everything is becoming digital. This is again something related to sustainability. So this is it from my side, and you're welcome to ask any questions, any clarifications you would like.
So the question is, and actually there are some figures that go beyond the current 15, 16. I think Bloomberg is expecting 30% in a couple of years. So considering the size of potential issuance and the frameworks and the requirements for investing in eligible assets, are there enough eligible assets that are growing at the same pace of issuance? Because otherwise you'll end up with either competition in assets or some leniency in applying the rules of ICMA, right? So is the GDP growth enough in terms of capex or whatever the spend is to find eligible assets for 30% of potential issuance, to find eligible assets to invest in?
I think this is a very kind of timely question, because I personally think that the bulk of the sustainability related investments, if we just go back to the investment gap, just show you. Yeah, this one. So this one is, it's showing is investment is going. What I have personally noticed is the bulk of the investment is going towards energy related solutions, so solar, etc. There are the bigger projects, for example, the hydrogen, the carbon capture facilities, but the viability and the bankability of those projects without any kind of governmental support is something that raises concerns of many institutions. Many of these products here, and that's why I put the Munich Re insurance related, because many of them for the financial institutions, they are actually, even investors, not only FI, they are considered to be new risk areas, things that they are not used to, new technology. So for them to go and invest into these projects, and the majority of them, they come from startups, from VCs. And those are the higher risk kind of categories, which affects the grading of the bonds that are being issued. So to answer your question, I think it's a matter of how fast is the investment market working in making these projects bankable and in place. And I think a lot of the government initiatives, if they work closely with the private sector, they can ensure the supply of these kind of projects where there is interest from the capital market to actually finance them. It's just a matter of having the right projects, the right investments in place. So PPP, for example, is one of the biggest areas. And if you look here, the infrastructure, how much can it stand by its own? So that's why, again, how much is it available? How fast can it move? All of these issues could have an impact. Yeah, I hope I answered your question.
Yeah, but I'll just follow up. So from an investor perspective, so if you're looking at some sort of impact reporting from an issuer over the past 2 or 3 years, have you seen some leniency in reporting to some extent, or I don't want to go to the extreme of greenwashing, but a bit of an area where if my framework says 1 to 3, I might add another level just to get more assets into the eligible list. Like an example, we've seen green mortgages going all the way from lead gold to maybe accepting some silver certificates.
Yeah.
It started with excellent only. That's a shift of assets from pure green to some level of greenwashing. Have you seen that trend happening?
Greenwashing is a very serious issue. And that's why the EU taxonomy has been getting more strict in terms of what is the classification of green and what do we consider to be as an acceptable green asset or investment. I would say if we speak about the international capital market standards, you have to have a framework in place. So this framework normally, initially when you issue it, you have a second party opinion that is verifying everything. But then there is, it's not a requirement, it's a strong encouragement that on annual basis, you have an external review of the asset allocation for that green framework. Now, when there is a will, there is a way. So if someone wants to do something, they can kind of skip anything that has to do with audit compliance, etc. And there are incidents of greenwashing. So it's not something that I would say it's not there. It is there. And that's why you have more stepping in from regulators. Like, for example, in Bahrain, now the central bank has issued certain guidelines. It issued a consultation paper. I think they're finalizing it soon in terms of exactly what kind of reporting are in place. So at least in our part of the world, there is still no clear direction and consistency on what needs to be reported. So you see, even the companies that are issuing sustainability reports, they can report different aspects. Now, how can you verify them? Some use external verification, some don't. But personally, from my observation, I see a lot of companies using CSR as sustainability, which they are not exactly the same. So to answer your question, yes, there is that tendency. And that's why the importance of verification, the review is really high. And tightening of guidelines by regulators is important to be in place to protect investors.
Thanks.